Hello, my name is Victor, and in today's video, I want to talk about a stock that I really rarely talk about here on my channel, and that is Shopify. We recently got their earnings last week, so let's not waste any time. Let's get right into it. In the spirit of love and camaraderie, I want to give a massive thank you to all of my subscribers. Thank you so much for the love and affection that y'all show me here on this channel. I hope that you ate a ton and had a great time with your significant other on Valentine's Day. But without further ado, let's get things started by looking at how Shopify has performed so far in 2026. And it would be quite the understatement to say that Shopify has been struggling so far in 2026 because they are down 28% year to date. But I am here to ask the question, is Shopify struggling so much this year because of their most recent earnings or because of fundamentals? Or is there some other reason why Shopify is struggling so much so early in the year? Well, if you're here for a fundamental analysis, you are exactly where you need to be because we are going to get things started here with the income statement for Shopify. And I'm going to split up the income statement into pros and cons. So we're going to start off with the pros first. And right off the bat, when I had a look at this income statement, I see that revenue has been incredibly strong and continues to get stronger because in the most recent year, Shopify's revenue increased by 30%. Very strong number on that top line. And as I made my way down through the income statement, I found that gross profit and operating income have also been incredible for Shopify over the last year. But now moving towards the cons of the income statement, and it's really that last third of the income statement where I started to ask myself a couple of questions and where you will see some red marks here for Shopify. The first thing that I noticed was the growing transaction and loan losses are increasing by a substantial amount here year over year. Keeping in mind that every number here is in millions, as you can see here in 2023 for transaction and loan losses, back in 2023, that was 152 million for this line item. That grew by 49% in 2024 up to 227 million. And in their most recent year here in 2025, that grew a whopping 84% up to $417 million of losses for Shopify. So now clearly this is not something that we want to see increasing by this rate year after year, but I'm going to keep an eye on it. So far, compared to the overall revenue that the company is bringing in, it's nothing too entirely concerning right now. It's just the rate of growth in this line item is what caught my eye. But when we continue down the line, net income for the end of 2025, while yes, it was in the green, they made money for the year, it was 39% less compared to this time last year. And I made sure to highlight one thing that stood out to me, and I'm going to zoom in again here so that you can see. There is a net loss on equity and equity method investments of $316 million. So Shopify seems to have had a bad year when it came to their investments, and they lost a pretty penny because of it. Now, this isn't the end-all be-all for the net income of Shopify. I mean, still, they made a good amount of money for 2025, especially considering that they lost money back in 2023. But it is something to keep an eye on and something that I will revisit here later in the video when we look at PE ratios and potentially a PEG ratio through 2026. So be sure to stick around until the end of the video for that. And also, I will give you my overall opinion on what I am doing personally with Shopify in my portfolio. And also want to take a moment here, and if you are enjoying the video and if you appreciate me doing the research, taking the time to look into stocks, I would absolutely appreciate a like and also a subscribe so that you don't miss out on future videos. But let's not waste any more time. We have the second financial document that I always look at whenever I'm researching a stock's performance, and that is the balance sheet. And I'm going to tell you right from the get-go here that Shopify has an amazing balance sheet, one of the strongest balance sheets I've seen in a while, actually. Now, I didn't give the percentage growth year over year, but they do have more cash at the end of 2025 than they did at the end of 2024. And I personally love to see a company that continually grows their cash reserves year over year, especially during turbulent times like right now, where Wall Street seems to have some new concern every other week. So knowing that they have that cushion of safety just in case, I personally really like to see that. Also, what I really enjoy seeing is that total assets for Shopify were up 9% year over year. And a hat trick here for Shopify is on top of having more cash and on top of growing their total assets, their total liabilities are also down. So you know what that means. Shareholder equity absolutely exploded, up 17% compared to this time last year. Love to see it. And for those of you who are new, equity is essentially assets minus liabilities. So you want to see assets growing over time while debts and obligations are decreasing over time. And I also have my total liabilities divided by shareholder equity ratio here, which for Shopify is 0.13. For those of you who are new, anything under 1 is what I want to see as an investor. So this is actually one of the strongest ratios I have seen here, even among the Magnificent Seven. So Shopify here has one of the strongest balance sheets that I have personally seen over the last 6 months. And last but definitely not least is the cash flow statements, which I personally love because there's no fancy tricks or, lowering total shares like in the earnings per share or the income statement. Cash flow lets you know exactly where all of the money is going or what the company is using the money for. And for Shopify, again, all I am seeing is just great numbers back to back to back because their operating cash flow from operations was up 26% year over year. I mean, that is amazing, but even more amazing than that, especially during turbulent times like I mentioned right now, is that their investing and CapEx spend is absolutely under control. And that is something that I have not seen here, at least over the last couple of weeks, because if you watch my videos, you know that I have looked into Meta, Amazon, Google, I know I'm missing somebody here. Basically all of the big tech stocks, and their CapEx has been out of control. So seeing a number here for Shopify, I'll zoom in here so that you can see purchases of property and equipment, also known as CapEx spend. They only spent $26 million for CapEx spend. It's so refreshing to see a number so low for this category, especially from what I've seen over the last several weeks here. And right off the bat, I immediately noticed that Shopify has strong free cash flow. Again, for those of you who are new, free cash flow is cash flow from operating activities minus CapEx spend. So for Shopify, I have them with over $2 billion of free cash flow. And I went one step further when it came to my research with the free cash flow because I wanted to see the percentage of free cash flow divided by Shopify's market cap. For those of you still learning and trying to understand cash flow statements and all of this financial jargon, a good percentage that I personally like to see is about 5 to 7%, preferably on the higher end. For Shopify currently, that percentage is about 1.3%. Now, I know what you might be thinking, that is nowhere near that range that you had mentioned. But when I did the exact same calculation and saw what that percentage was a year ago, that was at 0.5%. So well over a double up here on that percentage, which is incredibly promising and shows that Shopify's free cash flow is going up over time, which again, is something that I love to see. And next, we have the PE ratio analysis section of the video. A fair trailing PE for Shopify, in my opinion, is about a 91, which is incredibly high, but you have to remember that Shopify is a growth company. You've seen the revenue, you've seen that top line growing by 30% over the last year. This is a growth company, so they have higher expectations, which means they trade at a higher multiple. Keep that in mind. Their trailing PE ratio over the last 12 months, in my research, is 118. Their forward PE ratio through the end of this year, 2026, I have at a 62. So what all does this mean? Well, Shopify has some high expectations in 2026 because, as you can see, that forward PE ratio is almost half of what the trailing PE ratio is. So on the one hand, it's incredibly exciting because, there's a lot of expectations going for Shopify here through the end of 2026. But on the other hand, if they were to stumble or to not hit the metrics that Wall Street is expecting of them, we could potentially see Shopify tumble even further than the almost 30% that they're already down in, 2.5 months here in the year? Pretty crazy. And again, I didn't want to stop there in my research, so I also wanted to look at the PEG ratio, which looks at the forward PE ratio of the stock and then incorporates the growth rate. Again, whenever I am doing my research, especially on growth stocks, the number that I want to see for that PEG ratio is 1, if not less than 1. For Shopify, I found that their PEG ratio currently, as of February 2026, is about a 2.2. So definitely a lot higher than I expected, but I also have to keep in mind that their net income was down by a tremendous amount here over this last year. So maybe revisions had to be made for the net income through the end of this year, and that is what I think is affecting that PEG ratio so much. So I didn't outright flag it, but I did put this little cautionary in yellow, just something to keep in mind if that net income does not improve over the course of the year. But now for the part that I am sure you have been waiting for. What do I think about Shopify here in February of 2026? Given all of the numbers, we had to look at their financial statements, we had to look at PE and PEG ratios. What is my final verdict? Again, in my opinion, I am growing my Shopify position. They are down from about $180, which was their high back in October of 2025. I see this as a buying opportunity. And I know I have said that a lot recently, but given how poorly these stocks have been treated so far in 2026, it's actually getting to a point where so many stocks are down here at the start of 2026 that I am having a hard time deciding which stock I want to buy or which stock I want to prioritize because I just see so much value in the stock market right now. And Shopify is a stock that I have owned for years, so this isn't a new position that I'm going to start here. My average cost for Shopify is about $68, so it is way higher than my cost basis, but again, given the PE ratios, given how strong the revenue growth is, the amazing balance sheet that Shopify has, I have to buy more. I see great value at these prices. And personally, for me and my portfolio, anything under $120 for Shopify is a buy. Anything under $100 for Shopify would be a heavy buy. So I'm actually kind of hoping that Shopify continues to struggle here at least over the next couple of months, because again, I am adding Shopify to my buy list. If you give me these prices with such strong fundamentals of a stock, I have to get in there and buy. There's just no way around it. And probably the strongest factor here that I am considering with Shopify is just how great they are managing that CapEx spend. Because again, Shopify is asset light. They really don't have a lot going on that balance sheet. They're not like Meta, Google, Amazon right now, who is spending so much money. In fact, those massive tech companies will probably have negative cash flow from how much their CapEx spend is going to be through the rest of the year. So again, to have Shopify here, who is a breath of fresh air when it comes to that balance sheet and the CapEx spend. I really, as a diversification strategy here, would probably start prioritizing Shopify compared to a company like, let's say, Amazon, who, yes, they are competitors because they're both in the e-commerce space, but they both function very differently. Shopify is asset light, like we mentioned, whereas Amazon is incredibly asset heavy. They're spending a ton on AI and infrastructure and warehouses. They have a ton of, delivery trucks, very different business models. Not saying that Amazon isn't a buy either, because if you watched this video, you would know that I'm incredibly bullish on Amazon as well over the next couple of years. But again, if I were to take the route of, okay, well, do I want to invest all of my money into companies that are spending like crazy? Why not have a stock which also has incredibly strong fundamentals, is in the e-commerce space, is poised to grow over the next several years? In my opinion, I think Shopify is a great alternative to the mega tech stocks. But I would love to know what you think in the comments below. What do you make of Shopify at these current prices of about $112 a share? If you made it until this point in the video, be sure to give me a like. It helps out tremendously, and subscribe so that you do not miss out on future stock-related videos. I make weekly videos on the stock market, my personal portfolio, and just overall stock market news. So if that is something that interests you, be sure to subscribe so that you do not miss out on future videos. As always, thank you again, and I'll catch you in the next one. Peace.